guys might be thinking, how can I choose which one I use? The main thing that foreign taxpayers do need to do, they need to file U.S. tax returns. So annually, every year, U.S. tax returns are due on April 15th. And what usually happens is property management companies would handle collecting your rents, taking care of your expenses paid, and they'll give you monthly statements, total income, total expenses. At the end of the year, you need to provide all this information to your accountants. U.S. income tax returns are due April 15th of every year. And it's usually a good idea to get the information to your CPA. Probably the sooner the better, so they have enough time to take care of your taxes. And one more thing to keep in mind is U.S. taxes are from January to December, unlike Hong Kong, which is fiscal year from April to March. So no difference there, and that may be a little bit easier to manage on your part. And for non-residents, they would be filing income tax returns, usually 1040 NRs, or tax returns. Yeah. Now, before I move on to the next part, any questions do you guys have about the ECI versus non-ECI or FDAP? I know it's a little bit.
Could you just clarify what you can deduct against your gross income?
Okay, so gross income, like in our example previously, you could deduct things like mortgage interest, property taxes would be another one. Homeowners association dues is another fee that could be deductible. Also, there may be property management expenses. So if you do have a property management company in the States, you can deduct those expenses against your gross rental income. So that's some general basics.
And how do you get classified as an EC?
Okay, ECI. Yeah. So what taxpayers need to do, again, file annual income tax returns. And when they file their first income tax return, they'll make an election to treat their, basically treat their rental income as ECI rather than as non-ECI. So,
is it because if you acquire a property using a company rather than a person, that will get you to be classified as an ECI?
So one way is company could help to do that, but you still would need to file an income tax returns for that cases. And I'll actually go into a brief introduction about company ownerships a bit later, so I'll discuss that question. Yes?
Just wondering, the choice of which method, does that affect how you get treated for capital gains and your eligibility for 1031 exchanges?
That would affect, for capital gains, no. And for 1031, usually this would be not. So usually no.
So you could do it either way?
Yes. So just brief introduction, property taxes. So property taxes are assessed on states and counties. In the US, there are 50 different states, as you guys might know. For property taxes, each different state or county may charge different property tax rates, usually ranging from 0.5% up to 2%. So it really depends on where you purchase your property. And property taxes are computed by taking the property tax rate, like you mentioned, 0.5% up to about 2% is usually the maximum, multiplied by the fair market value or the assessed value. So each different state or county does have their own rules in place that you would need to look into regarding property tax treatment. And also, property taxes are usually paid annually, and your property management company would assist with taking care of these payments for you in the USA. So I think, like Rob mentioned, usually most investors would not be traveling back and forth to the USA that often. So they wouldn't need to be making these payments directly, whereas property management companies handle this for owners. And this is FIRPTA, which is similar to capital gains, and which I'll go into, but FIRPTA stands for Foreign Investment in Real Property Tax Act, which was started in 1980. So this is a law that basically treats, there's a withholding tax of 10% upon the sale of property by a foreign investor. So when a foreign investor does sell their real estate property interest, they will be usually hit by a 10% withholding tax.
That's regardless of any state tax? as well, right?
So there could be, yes, so that's a federal level.
Yeah.
There possibly could be some states that do impose a similar type of tax treatment. It really depends on the individual state. I know I guess for Hawaii, I grew up in Hawaii. Hawaii does charge something very similar called FIRPTA. So if investors do buy property in Hawaii, there would be, instead of a 10% withholding, there would be a 5% withholding tax. So it's in addition.
I think, so in terms of the properties that were presented, I think